Shoprites stores have been kept busy this past year. The retail giant says during the period it surpassed the 250 billion rand sales mark for the first time, with CEO Peter Engelbrecht noting that in rand terms, the firm's growth in sales for the past 12 months alone equated to over 20 billion rand. That's as cash-strapped consumers continue to buy into Shoprites' approach of offering value and accessibility. The gains helped boost profits. Diluted headline earnings per share rose 15.8% for the full year. That has led to a win for shareholders as well. A final dividend of R4.96 has been declared. That takes the total payout to R7.81. This is 9.7% more than what investors received last year. The 2025 financial year was a tale of two halves for Motus. The integrated automotive business felt the strain of global economic uncertainty, high interest rates and intensified competition in the first 6 months. But management actions targeting sales, margin recovery and operational efficiency during the rest of the year drove a turnaround and helped the firm deliver an overall stronger performance, with annual headline earnings per share ticking up 5%. A final dividend of R3.10 has been declared. That takes the total payout for the year to R5.50. That's a 6% increase on the previous period's payout. iOCO expects to be back in the black. The technology group has forecast annual headline earnings per share of between 35 and 45 cents. That's after a loss of 0.21 cents previously. The firm has attributed the swing to early gains from its transformation strategy. iOCO plans to release its results on the 28th of October. Barloworld has completed its internal investigation and has not identified any U.S. sanctions violations in its dealings with Russia, but it's identified apparent violations of U.S. export controls. The multinational industrial firm says it is taking this seriously and addressing the matter. The final report has been submitted to U.S. authorities. The ANC is set to reignite debate over expanding the Reserve Bank's mandate, and that will take place at its National General Council in December. It's a decades-long discussion that's often divided the party, with some calling for a more activist monetary policy, while business and investors warn it could dent market confidence. The NGC doesn't set policy but serves as a testing ground for ideas ahead of the next elective conference. This year's gathering will be the first since former President Jacob Zuma was at the helm of the party before stepping down in 2018. Discussion documents suggest members weigh up the bank's role in development and transformation, balancing inflation control with employment and growth. In international news, Nestlé's investors faced uncertainty after the company's sudden change in leadership. Mark Schneider was ousted as CEO due to underperformance and Laurent Freixer took over. Here's more detail in this package report.
Nestlé investors were pitched back into choppy waters. The Swiss food giant ousted its CEO Laurent Freixer over an affair he had with a subordinate. It's another blow for Nestlé investors who have been frustrated with 3 years of share price declines and no signs of a recovery this year. Freixer will be replaced by Philippe Navratil. He's a rising star at the maker of Nescafé coffee and Kit Kat bars. The dismissal of Freixer follows an investigation into an undisclosed romantic relationship with a direct subordinate. Nestlé said it breached its code of business conduct. Freixer spent 39 years with Nestlé and just a year as its CEO. Now he will receive no exit package following his departure, the company told Reuters. Nestlé's shares, a bedrock of the Swiss stock exchange, have lost almost a third of their value over the past 5 years. Freixer's appointment failed to halt the slide, with the company's shares shedding 17% during his leadership. The dismissal was featured on the front page of Swiss newspapers, with one noting that Nestlé had lost its legendary stability, where CEOs stayed for years before eventually becoming chairman.
And Kraft Heinz plans to split into 2 separate publicly traded companies, one focused on its sauces business and the other on groceries, in an effort to boost growth after experiencing sluggish sales in recent years.
Kraft Heinz said it would split into two publicly listed companies. One will focus on the sauces business and the other on groceries. Global Taste Elevation Co. houses brands such as Heinz Philadelphia and Kraft Mac and Cheese, while the North American grocery company consists of Oscar Mayer, Kraft Singles and Lunchable Labels. The sauces unit raked in about $15.4 billion in sales in 2024. The grocery business generated about $10.4 billion in sales. The company expects the tax-free spin-off to close in the second half of next year. Kraft Heinz said in May it was looking at opportunities for mergers and acquisitions to shore up shareholder value. It's been struggling like other packaged food companies as consumers shop for healthier and more affordable condiments and snacks. The company's shares were slightly up in pre-market trading. The stock has lost more than a fifth of its value over the past 12 months.